There was a growing theory floating around the internet claiming that the only reason Bitcoin isn't trading in the hundreds of thousands today is because large financial players are quietly holding it down. You may have seen posts accusing major banks, especially JPMorgan, of shorting MicroStrategy to indirectly suppress Bitcoin's price. Now, MicroStrategy isn't a normal tech company anymore. Its entire mission has basically become raise capital, buy Bitcoin, repeat. And recently, its stock traded so low that the entire company was valued tens of billions below the value of the Bitcoin it owns. That meant anyone buying MicroStrategy stock was effectively buying Bitcoin at a discount. At first, I ignored all the bank manipulation rumors. It felt like classic crypto conspiracy stuff. But the deeper I dug, the more I realized the real story wasn't about Twitter drama. It was about something far bigger, something economists have warned about for centuries, the death spiral. Before we dive in, I'm Tom, and this is The Wealth Collapse. Subscribe now to stay ahead of the curve, because when the history books are written, you'll want to be one of the few who saw it coming. Let's rewind. Historically, countries and corporations that borrow in terms they cannot control often walk right into the same trap. Take the late 1800s. The Ottoman Empire borrowed massive amounts from European banks, denominated in gold. When the global financial crisis of 1873 hit, lending froze, rates shot up, and suddenly the Ottomans couldn't roll over their debt. Their currency weakened, gold soared relative to their money, and the empire ultimately defaulted. As punishment, European bondholders forced the creation of the Ottoman Public Debt Administration, basically foreign bankers taking control of the empire's tax system. This pattern repeated in modern times. Greece, after borrowing huge amounts in euros, a currency it didn't T-print, collapsed in 2010. The IMF stepped in and demanded the creation of an asset fund designed to sell off Greece's most valuable public holdings to repay creditors. These are textbook cases of a death spiral on a national scale. But the same dynamic can happen to companies too. In the early 2000s, the SEC investigated a financing structure known as PIPEs, private investments in public equity. A notorious form of these deals was the floorless convertible, where lenders received more shares when a company's stock price declined. That meant lenders could short a company's stock, push the price down, and receive more shares as a reward, then dump those shares into the market, making the price fall further. Downward pressure created more downward pressure, a self-feeding collapse. The SEC found that companies that entered these arrangements lost, on average, about a third of their value within a year, even during a bull market, and roughly half were eventually delisted. Fast forward to today. MicroStrategy isn't using floorless convertibles, but it does carry billions in notes, preferred shares, and obligations. And while their Bitcoin holdings dwarf their debt on paper, roughly $59 billion in Bitcoin against around $16 billion in liabilities, there is a catch. The company owes nearly $800 million per year in interest and preferred dividends. That's over $2 million every single day. Preferred dividends can't just be turned off. Those investors bought Bitcoin-linked instruments with the expectation of reliable, high-yield payments. So where does MicroStrategy get the cash? Not from its software business. Instead, the company has built a special reserve of about $1.4 billion in cash, enough to cover around 21 months of obligations without selling Bitcoin. They funded that reserve by selling stock only when the stock trades above the value of the Bitcoin it represents. They call this trading above WMEX MNAV, where MNAV means the premium over their net Bitcoin holdings. When MicroStrategy trades at a premium, issuing stock makes sense. They sell shares that are temporarily valued higher than the Bitcoin behind them, collect cash, and reinforce the reserve. But when the stock falls below the value of the Bitcoin it represents, below 1x MNAV, everything flips. Issuing stock at that point would be like selling $1 of Bitcoin for 80 cents, so they stop. If the stock stays undervalued long enough, the cash pile drains. And once the reserve is gone, MicroStrategy's only way to keep paying its obligations is to start selling Bitcoin. Selling Bitcoin pushes Bitcoin's price down. A lower Bitcoin price makes MicroStrategy's balance sheet look even worse, which could force more Bitcoin selling. This is the modern corporate version of the death spiral. Now, the question, who benefits from pushing the stock below MNAV? That's where theories about JPMorgan and other big banks come in. Some believe they're shorting MicroStrategy with the goal of triggering forced Bitcoin selling, letting them buy BTC cheaper than Michael Saylor ever did. Do we have proof? No. Public filings and trading data don't show a coordinated attack. But banks have released negative research, warned about delisting risks, and highlighted refinancing dangers. And hedge funds like Jim Chanos have openly shorted the stock. Whether coordinated or not, many players share the same incentive: profit from volatility, hedge Bitcoin exposure, or bet against Saylor's strategy. Individually, it might look random. Altogether, it can look coordinated even when it isn't. At the end of the day, if MicroStrategy stays above MNAV, they can keep selling shares at a premium and survive indefinitely. But if the stock remains below MNAV long enough for the cash reserve to drain, they'll be forced to liquidate Bitcoin, and the spiral begins. Some people think Bitcoin should already be $200,000, but markets move according to incentives, and right now, two opposing forces are colliding. One group incentivized to keep Bitcoin's momentum alive, and another incentivized to keep MicroStrategy, and by extension Bitcoin, suppressed, at least for the next 21 months. Time will tell which force wins. Personally, I'm holding my Bitcoin. Historically, negativity around Bitcoin has always been the fuel for its next leg up. If everyone agreed it should be worth $1 million, it would already be worth $1 million. Let me know your thoughts in the comments. Do you think a death spiral is coming, or is this just noise? Thanks for watching. Make sure to like and subscribe, and I'll see you in the next one.